War in the Middle East. What's your playbook?
Make no mistake, the only headline that matters this week is the conflicts between the US and Iran. As the conflict shifts into a full-blown crisis, the shockwaves are hitting every corner of the financial world. Forget the Fed and the data for a second. War is the only thing driving the tape right now. Today, DBG Markets takes 2 minutes to help you navigate these volatile waters. Unsurprisingly, crude is at the center of this storm. With the Strait of Hormuz facing a massive blockade threat, the energy market has flipped into panic mode. We aren't just trading a risk premium anymore, market are pricing in actual supply destruction. As long as the threat of a blockade looms, the bull case for oil is rock solid. The strategy is clear: buy the dips. In a war-driven market, there's almost no ceiling for crude. Then there's gold. It's the ultimate safe haven, but we saw a sharp pullback yesterday. Why? It's a classic case of a surging dollar and rising treasury yields forcing a massive repositioning, especially with gold near record highs. But don't let the dip fool you, the safe haven trade isn't dead. The $5,000 mark is the line in the sand for short-term traders. As long as the macro backdrop stays this messy, any pullback in gold is just a regrouping for the next leg up. Moving to the stock market, global equities are in full retreat. While US indices tried to bounce yesterday, the risk of a deeper correction is still there. Surging oil prices have reignited inflation fears, and from supply chain chaos to a hawkish policy outlook, the signals for US stocks are turning ugly. It's hard for Wall Street to stay insulated from a global sell-off like this. With risk-off sentiment in the driver's seat, expect more pressure on the downside. Finally, keep an eye on the Canadian dollar. While the US dollar is catching a bid on safety, the CAD is proving incredibly resilient. As a classic commodity currency tied to the hip of oil, the loonie is feasting on these higher energy prices. For FX traders, this is the one pair you really don't want to ignore right now. Bottom line, we are in a purely headline-driven market. Fundamentals take a back seat when geopolitical shockwaves are this intense. As long as the conflict continues, expect more turbulence and uncertainty across the board. Stay sharp, watch your risk, and don't try to stand in front of a runaway train. This is DBG Markets. We'll see you next week.